Welcome to Upleveling, the podcast dedicated to building better leaders, smarter systems, and bigger results. If taxes are blindsiding you every spring, it's not the IRS's fault, it's your process. Maybe it's even your professional. So we're going to hop into that today. And we're going to talk a little bit about the mindset around taxes, as well as a strategy and framework that you can use to cut out your stress, protect your cash flow, and make better decisions all year long. So let's hop into that. Taxes are an operating cost. They're not a once-a-year event. And you really need to change your mindset around taxes, because taxes are a sign of a profitable, healthy business. If you want to make money, you should expect to pay taxes. Now, yes, there are lots of strategies to reduce your taxes, but you have to change your mindset about taxes. I think the biggest problem, and this is a problem I have as well, is you see how our government spends the money and it really upsets you. And I 100% agree. But at the end of the day, we do have an income tax system that is based off of income. That's why it's called income taxes. And if you want to make money, you're going to pay taxes. Now, you should work with a proactive advisor that's going to help you reduce that bill. But again, if you can change your mindset around this, and the problem is you've probably hung out with people that have told you, I pay zero taxes, or I've never paid taxes. And I'm going to challenge that and say that those people are not wealthy. Maybe they've played the game and got their taxes to zero each year. But guess what? If you don't pay taxes, you can't get a loan, you can't buy real estate, you can't buy a vehicle, you can't buy anything that has a title or a deed attached to it. And so you're not going to build wealth over time, which is what we want for you. So just remember that taxes are a sign of a successful business. And we also need to treat taxes like you treat your payroll. You should forecast for them, you should fund them, and you should review them regularly. That way you know what's coming up and you set aside funds. One of the strategies that I like for clients to do is open a separate bank account called your tax account. And every single month, move money into that bank account so then you can make your quarterly estimated tax payments, because that is going to help you also avoid penalties. If you don't pay your estimated taxes based off your prior year, the IRS is going to charge you a penalty. This is on page 2 of your 1040 as well, if you want to look at it. And so most of the time, you're going to pay more in a penalty than you're going to earn in interest. So don't just set the money in the bank. What you want to do is create the system to where you move some money every single month into the account, whether that's 5%, 10%, you can do it based off your revenue or your net income. If it's net income, it needs to be a higher percentage, let's say 20%. But if you want this to be easy peasy, look at your revenue and say, okay, I'm going to set aside 3% of this every single month into my tax account. And then each quarter, you're going to make your quarterly estimated tax payment. And if you're not sure what that amount is, you should have been given vouchers with your previous year return that tell you how much to pay. If you have no idea what I'm talking about, then I would love to talk to you, because you should be a client at Align CPA, because we don't want our clients to be surprised and we give them that information in advance. But that also leads to my next point. Why are you getting surprised? It's probably because you're being very reactive and you're only having conversations in April with your tax professional. That means you're waiting 6 to 12 months to talk about what you owe for the previous year. You can only be reactive if that's what you're doing. Or maybe you're getting surprised because you have messy books, or even worse, you have no bookkeeping. And so really you don't have any idea. Maybe you're running your business just solely off your bank account. And so if you continue to do that, you will continue to get surprised. It's the saying of, if you don't change the input, you're going to continue to get the same output. So if you want something different, you're going to need to go get something different. This is exactly why we work with clients on a monthly basis at Align CPA. We give them monthly financials so that they know exactly how much money they made. And we'll get into kind of all of that and how it works as far as building a cadence for taxes. But the third thing in shifting your mindset is wanting the outcome of proactive planning. What are you even going to get from that? So if you can get out of that reactive mode to where you're not having conversations just in April, or you're not just doing your bookkeeping once a year, then you're going to be in a proactive state. That's going to give you fewer surprises, fewer penalties, and honestly, more cash to reinvest, because you're going to know exactly what you owe the IRS. And this is exactly why I like having that tax bank account or making estimated tax payments, is I want to know what's in my bank account, that's my money. I don't want to look at this bank balance and have no idea how much of that actually belongs to the IRS. I want to know that what's in my account is mine, and then I can make better decisions for the business. I can decide, do we have the cash to hire? Do we have the cash to buy real estate? Or do we have the cash to buy other or new equipment? That is exactly what proactive planning will allow you to do. So our next thing is we want to build a cadence that is going to stop surprises. So what is a cadence? Cadence is just the rhythm of how things work. So we want a cadence or a rhythm that's going to make sense. Let's walk through what that is. So that is monthly financials, so that you can do a monthly review to look at your profit and loss and see how much money you're making. And then if it's significantly more than the prior year, adjust your estimated tax payments or adjust how much money you're putting into your tax bank account. Because if you're making more money year over year, that tax balance is going to go up. Yes, there's some planning we can do, and we're going to talk about that. But overall, income taxes are a percentage. So if we're reviewing this on a monthly basis, we should be eliminating surprises year round. My worst situation would be meeting with a client in March and telling them how much they owe, and they're surprised. Because if we are doing our job right, we have told them all year long how much money they've made each month. And then our next rhythm is our mid-year tax projection. And so that's where we're looking at the first 6 months to see what has happened so far. And then we're going to project the remaining part of the year of, okay, here's what we think the rest of the year is going to look like. And if we're right based off of that, our projection is going to tell us, here's how much we are set to have as net income, and here's how much we expect to owe based off of that income. So that means not only every month are you seeing how much money you've made, now we're giving you a mid-year projection to say, okay, it's mid-year, here's what we think you're going to owe. Are you prepared for that? If not, what changes or habits do we need to make sure we're prepared for this time next April? And so we're having those conversations in July each year. Again, our job at Align CPA is to eliminate surprises. And then after that, we go into a Q4 year-end planning meeting. So if you're listening to this podcast live, this is exactly what we're doing with our clients right now. In that year-end planning meeting, we're looking at the first 3 quarters of the year, and then we're projecting the fourth quarter, and we're also meeting with the clients. We're going through our tax checklist of items, which is like 3 pages long, of discussing things that they can do to legally reduce their tax bill. We're talking about things like retirement plans. We're talking about things like hiring your children. We're talking about HSAs and deductions and revenue, all of the things. But the benefit of working with us is it is customized to that business. Because one of the great things that we do is we send out a questionnaire before this meeting, And we ask questions like, tell me about what your main focus is. Are you trying to set aside money for retirement? Are you trying to buy real estate? Are you trying to sell your business in the next 3 years? Because all of the tax strategies that we may recommend are going to be dependent on that answer. We want to align your tax strategies with your business. Because here's the thing, if you tell me that you want to go buy real estate, then there is no reason that we need to drive your net income to zero. Because guess what? You're not going to be able to go get a loan. Or if you tell me that you're going to buy real estate, then we can start talking about strategies of how to structure that purchase, how to get it financed best, what's the best way tax-wise. Like, there's so many conversations. And what I just want you to realize is that's exactly what it's about. It's about communicating to your tax professional, what are your business goals? Because your tax strategy should align with your business goals. And we're doing all of this in the year-end planning meeting. We're going through the strategies, we're going through your goals, and then we're going to give you a projection of where you're going to be once the year-end closes. So again, we're eliminating surprises, and you know exactly what you're going to owe to the IRS. And why does it even matter that we're doing this in Q4? It matters the most because we still have time to act before December 31st. We have time for deductions or for strategy. And if you're just meeting with your tax professional in March or April, you don't have time to make any changes because the year is closed. And so we want to be proactive, and we meet with our clients in advance so they have the answers that they need. And then we still have time to implement new strategies. So in all of this cadence, we've built in touch points that are monthly, semi-annually, and then at year end, that's going to cover everything. We're going to make sure that your books are clean and accurate so that you have that clarity and confidence to make decisions. We're going to update your tax projection so you know exactly what you're going to owe to the IRS based off of what we're projecting. We're going to talk about the estimated tax payments and whether you've paid in enough or you haven't, and then what's the next steps you need to take. And my goal in all of this, again, is just to eliminate those surprises. So let's talk about, what does a real tax projection include? It includes looking and reviewing your year-to-date financials. We determine, are there any red flags here? Are there any audit risk that we need to discuss? Because part of our job is to reduce audit risk. We don't want you to get audited just as much as you don't. And so we're going to talk about what red flags we see in your accounting or in your business that we can reduce. And then we're going to project your taxable income and expected liability, so we know exactly what you're going to owe. We're going to talk about any payments that you've made or remaining payments that you should make to avoid penalties. Then we're going to talk about estimated tax payments and how much you've already paid in, so we can let you know how much remaining you should pay in. And we're doing this so we can avoid penalties, because that's another way we're going to reduce the amount you pay to the IRS. And we're delivering you a clear number with a funding plan of cash and how you're going to do that without scrambling come April 10th. And then in this meeting, we're talking about the different levers you can pull before year end. What deductions are you legitimately missing? Making sure that you know what you can expense as a business and what you can't. We're talking about the timing of whether we should accelerate expenses or we should defer income. And we look at your tax brackets, because tax planning is not a one-year event. We like to do that in a multiple year event, because we want to keep that tax bracket, that effective tax rate, as low as possible over multiple years, not just one. We're also looking at retirement contributions. Can you put more aside? How is that going to reduce taxes? But again, we're talking about this in line with your business goals. If you are in ultra growth mode and you want to hire people and you want to buy real estate and you want to buy equipment, then we're going to talk about retirement contributions and what we should do instead of, should we do a $10,000 plan instead of a $40,000 plan? What's going to make the most sense for you to achieve your business goals? We'll look at your entity and make sure you are set up the right way. Should you be an S Corp? Should you be an LLC? Should you be a partnership? All of those different things to make sure you're not overpaying in taxes as a whole. And again, we're tying all of this to your business strategy. We want to align your big decisions of hiring, bonuses, buying equipment, expanding with tax and cash flow. Does the whole picture make sense? Here's a good example. We worked with a client last year that had a very high W-2 and wanted to do some real estate strategies. He had a short-term rental, was thinking of a cost segregation. Well, what we realized is he switched jobs and his W-2 was temporarily reduced drastically. And so even though everything on social media told him, do a cost segregation so you can pay zero taxes, it did not make sense for this client because he was already in a 10% bracket. And what that means is we're not going to do a tax strategy that's going to take you from 10% to zero because that math doesn't add. What we want to do is wait until that W-2 bounces back or wait till business income bounces back and you're in a 37% bracket. Then we're going to do a cost segregation, which is a real estate tax strategy to bring you down to a 12 or 10%, maybe even zero. I actually don't like paying zero taxes because we always want to take advantage of that lowest bracket. And so that's just a great example of how we had to know the whole picture in order to make a recommendation that is going to fit his business goals. So, why do most firms miss the mark on this? Honestly, most CPA firms, most tax firms really are after the fact tax preparers. And that means after the year is closed, they're collecting your documents, they're collecting your accounting to then report them on a form. Whereas our approach at Align CPA is much more strategic and proactive and very tailored to each individual client so that we're connecting their goals with their accounting and with their tax plan. And it gives us true alignment. So who really benefits most from this? Our best fit client are growth-minded businesses that are making roughly between $500,000 to $5 million in revenue, and they're wanting to grow or expand, or maybe they're wanting to sell, because those are the clients that we can help the most by legally reducing their tax burden and aligning their strategy with their taxes. And honestly, even below that, getting a proactive CPA early is still going to save you lots of money, and it's going to save you time as well, which is what we all want. So just remember that if you are working with a proactive CPA firm, you're going to get a more personalized action plan. It's going to tell you exactly what you need to do before 12/31. It's going to eliminate surprises and fear for you because you know what's coming and how much you can set aside. That way you have the confidence to make the year-end decisions that you want to, and you have the peace of mind that there's not a surprise right around the corner. So if your CPA only talks to you once a year and you really feel like you're flying blind, I would love to talk to you. Our clients receive tax projections, tax advice, and strategic moves so taxes aren't a surprise, and you can have the same thing. Thanks for tuning in to Upleveling. If you found value in today's episode, be sure to subscribe and leave a review. It helps more entrepreneurs like you discover the show. Let's keep the conversation going. Connect with us on social media or visit aligncpa.com for resources and updates. Until next time, keep leading, optimizing, and upleveling.